Greetings, market rebels. Welcome to this week's sector situation video. I'm Wayne. My partner Ryan's working on the market outlook, market overview, which will be coming out later today. It's January 22nd, 2023. And here we are, I think just a little bit in front of noon. Yes, a little bit in front of noon. So this probably will be a little bit shorter because I went pretty long in macro measure, and yet there's still some good stuff to talk about. But first, we've got to take a quick look at the disclaimer, trustee disclaimer there, excuse me, and then we'll take a look at the intellectual property rights notice, and then we'll be able to get started. So please have a quick look at that. The recap of last week, I guess the best note I could say is it just pays to know where you are, in my opinion. Really a strange way maybe to put it, but let's see if I can get the stop share, and then we'll flip over to the right screen for the quick sector view. So we're doing the quick sector view of the 12 sector grid that I've been working with, and there's other ones maybe we'll look at too. So this is a bigger picture view. What I really wanted is for everyone to be able to take a quick look at where the RSI sort of finished out on the daily on all of these different sectors, just so you have an idea. But we were talking about coming in last week, market was short-term overbought. We saw, after trying to make it as if we were going to keep rallying in the mornings, we saw that pullback happen on Tuesday and really Wednesday. So I think between that and the number of stocks above the 20, the number of stocks above the 50, I should say percentage of stocks above 20, percentage of stocks 50, percentage of stocks above the 200, that was starting to really get up there. We flashed that in last week's macro measure. And so then you got that pullback that, I don't think we should have been surprised by, and should have managed our positions accordingly. And that's why it pays to check out that and the overboughtness on your heavy duty intraday RSI readings, things like the 4-hour, 2-hour, 4-hour, things like that. That just give you that kind of advanced view that, man, when they get overbought, it's not as if it has to end, but when you combine it all together and see some of the vertical moves that we had, it made sense. We pulled back, but then we finished strong. We found support in the major index ETFs at places you'd expect pretty much, and then you'd kind of launch there late in the week on Thursday and Friday, worked our way back up. And now everything, if you watch macro measure, I think at this snapshot in time, which of course could change with any kind of Fed developments next week, earnings reports, anything, of course, that's why it's just you're doing your best at that particular snapshot in time. I'll be checking out the technical complexion. Then you've got to see what happens from there and adjust accordingly. But overall, a lot of sectors are also, I think, looking primed to go. These would be more or less the risk on sectors, and a lot of the defensive ones that we've covered, they lost their, like XLP, the staples, right? That's a defensive sector. And also healthcare, that's lost its luster. I think XLB and XLI, we said, were overbought, maybe double topping, and they did pull back. And I think that, that the good view there was they had kind of like, maybe they were victims of their own success, right? Because they really, really powered up significantly over the past few months leading into last week's or the prior week's highs, and then the drop we saw. And of course, defensive sector like utilities is now taking it on the chin, possibly breaking down further. But again, we know that comments from CEOs and other things, and of course the Fed the following week, a lot can change. Economic numbers can change thinking. But as it stands right now, the market's about 99%, give or take, expecting a 0.25 interest rate increase from the FOMC meeting, or 25 basis points. And that's it. Excuse me. So a lot of folks, I think, are convincing themselves that the rate increases are nearing their conclusion and they're pre-buying. And I'm not so sure that's a great move, but I think that's what's happening. If we say that we get through the Fed being neutral, CEO commentary neutral, in the big and earnings reports neutral, to me, the way the charts look, stocks would keep going. They'll keep going up. But again, that's all really big stuff, and we know that we're coming up to a really big time in the year because we've got not only all that kind of hitting not this week but the following week. Although earnings are picking up this week, we've got that big bear market resistance line to deal with. We talked about in macro measure that, like I said, I think it's on everyone's charts, and it's probably going to be an emotionally charged situation. So I would expect volatility around that to be sure. But we'll take a closer look at these on the big chart, and I'll just make some comments and maybe throw a few other things in, and then we'll call it a day, because I don't want to belabor this, but it does seem like they're taking the risk on approach again. Let's get the right. I want the right chart. I hope it's this one. Yeah. So let's start. We'll work our way through these up here. So the first one I'll take a look at is XLE. XLE. Now, this has been a tough one of late. We talked about it overall. I think we ended up last week kind of thinking like it was looking a little more bullish. And I guess it did ultimately do a little bit better, but it's just been squirrely. It really just refuses to go again. Keep in mind that I think overall, look, you break out above the 50 the prior week. We talked about that. Then you come in, you make a higher high, you reverse, not good, but it did hold with all those SMAs bunched up there, that confluence of SMAs, the top of the trading range, it held there and bounced. So as of now, right, you've got to say, well, it's above all the SMAs. It's near the highs of the breakout that it tried to put together. Maybe it's going to have another leg, and maybe it'll fight its way in towards these upper levels. And if it does, of course, that's good for energy stocks, and it'll be good for the indices that have energy stocks as components or holdings. In the case of the ETFs, but remember that higher energy is not a good thing for inflation. So even though I've seen CNBC in the same, I think, week way back in time argue that high gas prices have no effect on the consumer, and that lower gas prices will help the consumer at the same time. So it's just one of those fond old memories that you just can't even believe what these people are putting out in terms of their reportage on certain things. Anyway, let's move on to XLK. But overall, bulls are just still in control here. But remember, this could happen. This could turn out to be a lower high. So always sort of think ahead if you're new to this game. If this thing rolls over, look, that's a lower high. What's going on there? And you break down again. If you break back into this range, and you've effectively had a false breakout, you've gone nowhere. And then you have to wait and see what goes from there. But right now, right, I think the bulls are a little bit more in control, and they're on their way to having, I think, better control. If they can just push a little bit more, it'll be full bull control there. Let's go to the next one, which is, like we said, XLK. XLK, this has been one that's been picking up its relative strength. In other words, this is, you can see the market's certainly moved higher, but this, instead of lagging like it was behind some of the indexes, this has been picking up. And normally, of course, this is a leader, but this has been picking up and faring better than some other sectors. So I think there's been definitely at least signs of rotation back into here. And we talked about some of the very big name stocks in technology in macro measure, and a lot of those do look poised to try to go higher if, again, assuming neutrality in the near future of all these different news events, economic releases, etc. This is one that was part of that mix that probably would continue to go up because of the types of stocks that are here. But overall, the bulls have done a little bit better, but they're still not out of the woods. I still think there's a little bit more, tiny bit more, maybe bear control, but it's very close. I mean, it's 49.51 type of thing at this point in my book. And so you need to break out, right? You either need to break out or break down to really then cement, right, who is in control more. XLF, the financials. You have to like that higher low that we've seen in a lot of these things, though. And some people may say that this is obviously right on an angle, but there's a shoulder that I'm sort of tracing over there. There's the head in the middle, and of course, here's your next shoulder, and then maybe you have a compound one that you start coming up again. But just be aware of that, because if they do put that together, as I've said many times, you can have really good movement from patterns that begin to fulfill on things, and you kind of like put a line, maybe, hey, you break out, and even breaking up there would be big. But of course, breaking out would really kind of measured move stuff, height of the head, so versus the neckline, that kind of thing. You could have a big move that up, you could have a failure, right? It's a source of volatility. Just like anything else, you've got to handle and manage that properly. But right now, with the short-term moving averages upsloping, the 50 upsloping, and the long-term moving averages below there in purple, white, and rust colored, those are all starting to flatline. So you have to look at it, I think, this way. It's very interesting now because higher low versus there, but low or high here, and you rolled over. You've got to have that next leg of run that takes this high out ideally and approaches this high. But if it starts to do that and takes out this high with higher lows in, I mean, that's a very good sign for that sector. And I think this is one that the bulls are in control of. I would give the bulls a little bit more of a nod of control here at the moment, but right, you take out Thursday's low, you could be right back towards critical moving averages, which happen to be near critical lows, and that could shift quickly. That's just the market, being in the market. And I'd be willing to flip around and say, okay, well, I was at that juncture, I was a bull, but no, look what's happened. Look how they've changed the price action, the structure of the pattern. XLC, we've been noting this, I think, now for a while. This is another one that was really a super dog in 2022. Hot cluster low consolidation in here, higher low versus here visually. Then you start taking out the highs, right? That's taking out the highs and going. So this is something you've got to really like. I mean, anything that comes in for UOA Pro, as long as the indices are buoyant, the major indices are buoyant, and this continues to flash this kind of action, I'm thinking, I'm liking that. And I think the bulls are very close to cementing control on that one too. They need probably to finish the month strongly. I think the bulls will be firmly back in control of that. And you're looking at the 200 as the only thing left there, and then it's just going to be flat lines and maybe trend lines at some point. But this thing looks good. We should probably be a little diligent about this. And because I don't necessarily trade XLC or as an idea in some of the services, I'm not really big on updating the line. But what I did kind of notice there is if I take that line that we had there and extend it out, you can see what's happening there. So that's maybe breaking out and above the downtrend bear market trend line, bear market resistance line. XTN is another one. It just started to scream back. We talked about, look, we have a little pattern we drew there. We talked about that, break out, pull back. Amazingly, I hadn't realized, I haven't looked at it other than like on, hey, we're, quick look, not really on the smaller chart, the one we took, the grid chart. Hadn't pulled it up until now, but we can change this one now because we were out of time on that one. I should say we were out of space on that one, but that would maybe look something like that now. But that's kind of funny that we thought, I guess back in here, we may have drew that. I can't remember, but funny, we thought pull back and it did. And then it's going, and now clearly, right, you could see that this high are fairly close. And so if it gets through there, it'll be overextended, I think, in terms of, I'm getting a little freeze up here. I'm going to give everything a little bit of time. Maybe I shut down this, shut a few things down here, close. Maybe it'll give us a little bit better of a view here. Come on. Is it letting me do this? Looks like things just got slow on me. Maybe it's coming back a little bit. I don't know what caused that. If it expands here a little, we'll be back in business. But a little bit, right, approaching 65 on the RSI. So there. Come on, stay with me here, Thinkorswim. Okay, it might be catching back up. I'm not sure what just caused that little, I don't know if they call that like a memory leak or what's going on there, but something weird just happened there. But that has been looking better, and that's really a good sign. I mean, communications looking better, transports, pretty key sectors. A lot of the other ones, have had their day. Remember, financials have come back strongly. Tech is coming back. Energy is energy, but these are kind of like risk on, right? These are like, hey, they're kind of acting as if things are better. Now, a defensive sector like XLV, that's been struggling, right? So will it sort of have this maybe corrective action where it pulls out of that? Yeah, maybe. I mean, maybe it's starting to try right now, but we would probably wait to see this clear the 50 for sure, which is the gold line. Then I think it's very clear that there's a flat line right up in there, right near that 137-ish line there that I had from way back, I guess. So we'd wait for that to get above there to really feel better about that, I think, because right now I think that the bears are stepping up in there, and the bulls who have had control are really at risk of losing it. So that's something to keep an eye on there. Clearly, if the Fed spooks the market, people start to get more defensive. That's probably going to help XLV as it did before, unless it's risk off everywhere. XLP, again, the staples, the defensive sector, we said this one was right there, breakout or down, and lost to 200. You can see what happens when you lose to 200. Things got ugly quickly. And so now it's there. It's 38, so there's still more room to fall on the RSI before becoming oversold if it wants to do that. This juncture, if this were a good trader, I'd be interested in this one at this juncture for maybe a TNT name, because you probably would expect at this point to try to pop back up towards the 200, see if it's going to be resistance, or just, again, if the market gets heavy for some reason, this thing is already kind of failing, you would expect this to work its way lower, but not a big mover. So we did have, I think, fortunately, like in there in XLI, I think we had some put spreads on there in UOA Pro, which was good. Pretty sure about that, but not positive. So many names come through the system that I look at that I can't be sure when something expired or when it didn't. XLY, the consumer discretionary, like we said, definitely getting better. Definitely getting better versus where it was, and it was sort of outperforming, and bulls were coming in, and they this has become a mixed situation with that pullback that this suffered. Though you can see it got close to the 100 there in white, came back towards the 10 in white and the gold 50, but then it rallied on Friday. So overall, I think the overall pattern looks pretty interesting, and you've got like a little, maybe a mini cup and handle forming type of a thing. But this has got to take out the 100 for you to feel better about it. And if it doesn't do that, Thursday's low could send it towards the 20 there in blue, and then maybe even back down towards probably the top of this little mini range it was stuck in here. So that would be a pretty big drop, but for that one. But it's trying, and it's got a slightly better complexion, I think, on the dailies. Not overbought. You can see the RSI. Real estate, again, another one where tried to put some bullish trades in on that one in UOA Pro, and because we saw this kind of happening. And again, this is kind of the whole thing. Like, I kind of don't believe that real estate's in a great situation overall. Not saying XLRE, I mean, just real estate overall seems to me to be maybe at risk still, for sure. But again, you just got to trade what's there. And there was an opportunity to do a little something in there, and things related to that. So I think we had a couple bullish things in there recently, but hey, that didn't finish out very strongly. But we have to also acknowledge that it held above the 50 in gold in the short terms, the 20, the 15, and the 10. So, and they're all upsloping. So it's still trying. I wouldn't write it off yet. Clearly, another one that's got to take out its highs and then approach the downsloping 200. And if it gets through there, it could be something, right? It could be onto something, but nothing special there until you either break below the 100 or break above the 200. You could trade it inside of there, but again, not a great trader. These are things that are really more for information purposes of how's how's money being positioned? What's acting well? Where maybe we look in for some stocks because this trend is so strong or so weak, depending on the kind of UOA that shows up, or just momentum trade ideas in general. I think we may have noted that we saw XLB, XLI possible double top. I think we talked about it somewhere that it was lower RSI reading, similar price reading, so negative divergence. And that did start to bring about this little corrective activity, but it did hold on at a rising 50, rising 15 in red, and then rising 20 in that cyan or light blue color. So again, another one tough to call at this moment. RSI not too far from neutral 50. So again, I think you're going to use highs up there, and you're probably going to use, for a real breakdown, probably could start out at the 20-day there in blue, but just note that you've got, it might be hard sledding to get a really bad breakdown without news of some kind that would affect basic materials, because they've got the 200 and the 100 and 150 waiting to catch it again if it falls, like it did in here, like those two did right there. So, and you can see that the 100 mattered as resistance, right? So if you're new to this stuff and you're wondering, why is this guy talking about support and resistance? It's because you could see that right there, again, the 100 seemed to stop it in its tracks several times. What can you say, right? Stocks seem to respect flat lines, trend lines, moving averages, Fibonacci levels. They seem to. So you go with it. XLI, another one. I think we had another one with a put spread, or at least puts recently, which is good because it, I hate trading against the trend, but when you have that RSI with a negative divergence like that, and maybe it's a victim of its own success because they're going to rotate into something that maybe offers in their minds better value. Wall Street money managers, I'm talking about the other people's money crowd. That's what we talked about. That's what effectively happened last week. And you're kind of near neutral right on RSI now, and you're near the lower end of that recent range. So what do you do? Well, I think you have to wait for the range to break, right? That low there would really be it if you're patient. You've got all the big dog SMAs waiting for it to catch it right down in there as well. So it is what it is, right there. But I think I like, you could see, I think that some of these other sectors just look more poised to go more easily than this one does at the current moment. XLU is what we'll finish on out of our normal grid of 12. So I will take a look at XHB and a few more, and then copper, crude. We'll take a look at a few things quickly and then wrap it up. We've been saying, again, head scratcher, doesn't seem like a great time to be long housing stocks to me, but we don't trade it that way. And I do think I had a bull or two in here recently. Hopefully I did, and hopefully folks caught some of those in there. But I mean, overall, sort of this kind of, here's your lowest low. They took out the high, and then you consolidated, you pulled back, consolidated, and they broke out of there. They established a new range. They broke out of there trying to establish a new range, and now they're kind of still above that, right? So are they sort of stair stepping their way up? Do you kind of have something akin to a cup and handle that could fire, or did it fail to fire here, right? And that's why you got the pullback. So I think, again, you're looking at this is clearly these highs up near 67 and change, 68 is what you're looking at. If the market remains buoyant somehow, once we get through all the Fed, we get through all the economic reports, all the CEO conference calls, all the reports, and notice that these are all upsloping, the short terms. So, and they're stacked sort of where the 10's above the 15, which is above the 20, which is above the 50, and so on, until you get down to the big dog SMAs. But this SMA complexion doesn't look terrible at the moment. What I would do, again, I probably should do this now. I would do this. I would put a line under here, and I would try to find something that really kind of fits pretty well like that. And that's the trend that we're in right now. So if it breaks below there, which is effectively right, the 50, that would be your little below the 50. That would be your most aggressive, I think, point of really betting against this. Could you go for a short-term trade on a pullback to there if you wanted to? Sure. But I mean, in terms of really thinking this thing's starting to break I think it would be there that I would start to say this thing might really break. So that's about 61.5 ballparking it. So, but overall, I mean, the Bulls are in control of that. They just had a little weakness after a good break, a good run and a breakout attempt that failed. So now we have to see how it acts from that point on. If does it get its moxie back, right, to try to keep going. Another one we look at is XAU, and I'm getting a little bit worried about this one. This is always a tough one in my book to ballpark what's really going on here. It's a tough trader, but it keeps, I keep adding some bullish stuff, a little bit of bullish stuff here and there in the sector. And it just keeps finding a way to keep going. But I do think, look, this is a big level that we're at right here in this XAU. You could see that it would open up some territory to be able to move up to the next sort of range, if you will, right? Kind of from, we'll ballpark that at say 138 to 147, it looks like. Maybe 130, let's just call it 138 to 148 to give you an idea. So that would open up more room for it to go. And we'll see, right? You can't really hate, if you're a bull, you can't hate the upsloping SMAs. And you can't hate the fact that you're above virtually all of them, right? The only problem with this, I think, right now is it's not quite overbought, but it's not too far from being overbought. So that's my issue with it, is that it's acting well, but you got to be cognizant of the fact that it's getting close to overbought. And this can be a tough one. This can be really tough. We did say that some people, I think, would see that there's a cup and handle in here, while others would say, well, no, that's not a rounded bottom cup. They don't like this sort of sawtooth, what have you, cup bottom here. Again, I don't care about that, right? I really don't. I mean, if I were to draw a bisecting line through the price action, I could draw some, I'm a poor artist, and I could draw something that looks like a cup with a handle. And that's trying to fire more, but to fire more, it clearly needs to take out that recent high, which is not too far from here. So 60, what am I saying? That's 68, 138, 138-ish is what we need to see this thing bust through on XAU, excuse me. Now let's take a look at, excuse me, see what we can do with copper futures. We've been charting this for a while now, and we noticed a while back that it started looking better, to our surprise. You can't really say much. Now, I would say this is another one that's clearly overbought right now, right? So I would be very careful if I were to enter a bull trade here. Is it too late to buy? As some people say that are a lot more notable than me, right? Than I'll ever be. It's never too late to buy, never too late to sell is the phrase. But, I like buying when I'm coming out of and crossing resistance or something like that I can work with, which on this chart happened a while ago. We even had a line in place there in orange. Let me just extend that. It couldn't get above there and close above there. You notice that line kind of kept it in check until this day here. And notice that once it did do that, right, it had that really strong surge. So I think that's where we should have been buying this thing, closing above that resistance. Or if you wanted to wait for another day for confirmation and close above, take out more highs, whatever you want, but that would be the real buy area for me. Excuse me. But now, can you trade it? Yeah. I don't trade this. I don't even, I don't trade futures, but you could maybe have a vehicle. If we were using options, I would be with a low dollar short-term option to get started, catch a little more push, but I'd be very reluctant about rolling out until or staying in it, right, until I saw some corrective activity where it took the frothiness out of it and then started to go back up again. That's the way I like to do things, though everyone's got their own way. But I mean, that's just a sign of, well, wait a minute, is the world really coming back online? Because this has been a pretty good move. Visually, you can see that's a pretty good move. You really can't say it isn't and be objective about it. Lumber, we'll take a look at March lumber futures. Let's see where they are. We've been saying like, I don't know, a little bit better, right? Trying to get above the 50 and hold there. So, right, you can see the 10s crossing the 50 in white above the gold. So not terrible. So it needs to hold that, of course, to really feel good about it. And it needs to at least close above that high close there to start feeling better about it. So you're kind of in no man's land on this between, let's call it 435, and the 10-day right now is 412. So, right, wait for this thing to start breaking. Not that anyone's really trading lumber, but does it look a little bit better? Yes. Did it take out this high? Yes. Did it take out this high? That's a good sign in terms, but it did struggle to close above there and hold above there. So jury's still out, I think, on that. But you got to like it better than maybe back in here, right? When it was just pure downtrend. You got to like the way that these SMAs are trying to work. I think it's paid for us to keep our eyes on this stuff, right? Because we weren't caught off guard in any way by the market's strength, right? Over the last couple of weeks, we kind of saw that things have been improving for a long time in different ways. And even if it doesn't jive with my take, macro take, that is, I have to respect it and go with it, right? Because it has the final say on the situation, not me. And I just don't like what I found is I had as a market maker and desk trader, having made markets for people and having had risk placed with me more times than I can count or remember. I just don't like fighting with positions because it's just drains you. It just like you're constantly maintaining a position that's just a pain in the butt rather than being on offense. Market makers, you get stuck at times playing a lot of defense, and it's important to learn how to do that, no doubt about it. But yeah, I mean, it's a lot more fun when you're rolling up because you've got a nice winner on your hands, right? Than it is like, hey, I'm going to sell these because I need to hedge here because I'm still getting clobbered, and I'm not sure they're going to stop clobbering me, so I got to try to mitigate that. You know, that's a big part of your life as a market maker, desk trader that trades, you know, off of effectively making markets with a bid-ask spread, trading essentially, right, providing liquidity. And it's a tough game. You've got to get a lot of vig and to take the risk on the first place, and that's not always the case. But clearly, this is at a big level. You can see this has flatline characteristics right near here. If you look back across time right there, you can see the price respected this level many times. And I think the 100 is your answer. You know, if you look at crude, it's looking a little better. Yeah. Did it break above the 50, hit the 100, pull back the way a lot of technicians like to see, find support at the 50, and now is it working back up? Yes, it is. So if it breaks out, again, good for oil stocks. They're looking like they want to try to run. They're just not quite there yet. This looks like it wants to run. It's not quite there yet. And the only negative would be, yeah, that helps in terms of the indices where there's some big oil weighted in those, but it also would probably not be a good thing for inflation, which is, you know, the thing that everybody seems to be really checking out. HYG. I want to look at this one because, you know, this is something we've been noting that this does a pretty good job of sort of mimicking the market. And when they start to take this back up again, then that's probably a good sign. And it didn't, just like the market, it pulled back, but it did find support at the 200, and then it converted that converted that form of resistance to support. So that is a good sign, but you know, obviously needs to stay above there. It needs to power and take this out, and then it's on its merry way. But this is probably all about what happens with the Fed and so on and so forth. And I think the last one, because we don't want to go too far here, is let's take a look at SMH, the semis. And I think such an important sector, really good trader, you know, typically. This has been something that's of late done a lot better. It did struggle, could not take out highs, even though it overtook the 200. And now it pulled back to the rising 10 there in white, found support, much like the market having that sort of weakness, and then rebounded. So it seems poised. I think you've got your some earnings coming up, seems poised. And if they take this out, then I think you could say, well, where do you go next? And probably you're looking at these highs up here, which again, it's percent. I wish I could figure out why this thing sometimes leaves it alone and sometimes switches it to percent, but I can't. This is a big level up here at this 247, right? So if it gets that far, unless it's extenuating circumstances, right? I'm trimming and rolling up or both or closing, right? Because depending on how big of a run it's had, if it gets up to that point. But look, here's your worst situation. These these highs are clearly higher than some of the highs that were baked into here. This low is clearly higher than that low and that low. And now you're close to where you could take out a lot of these highs right here. So I think, is it trying to change trend? It seems like it is. Will it be able to do it? I don't know. This situation over here is similar to over here when it got overdone. And a couple of days ago, it was on the RSI. A couple of days ago, it was clocking in probably a little bit higher at the highs than it finished at. But overall, the bulls have come in for that. And if they finish this month strongly, remember, they only have one more full week and a few more days. They finish this strongly. I think a lot of charts are going to show that the bulls are really back in control on that. Not that we go up immediately, but that, probably they don't let it sell off so easily. So there's a lot of things that are really close, in these sectors. A lot of the risk on sectors are coming back. All the sectors were pretty much bought on Friday. And we don't know, again, how much OPEX stuff that is right there, but whatever's going on, right, they're putting more money to work. I think there's a lot of folks that I think are not let's say that are a lot of folks that are poorly positioned right now. There's a lot of put owners and hedgers that expected, like I did about 6 weeks to 8 weeks ago, that probably in the first couple quarters, this is going to be rough. But as the charts continue to get better, right, it's like, well, maybe they will, and they're just going to ignore it. I don't know. But you got to that's why I say the charts are the thing that lies to me the least, or it has lied to me the least, because right, and none of it in my mind makes any sense. That a lot of these bulls are getting way ahead of themselves, but that's what they tend to do, and that's why you need to watch the charts, in my opinion, because right, it's all about this game we play with trading is more about timing and momentum than it is about the macro situation. Although I do think macro is important to know, but I think it's more for risk management and preparing, not being caught off guard. You still, even if you're all over macro and know it really well, the market can do some strange things. But again, kind of a cup with a handle here with maybe like a double secret handle. I don't know, but certainly a lot of people are going to see different patterns in here. A lot of people are going to see maybe like a triangular shape in here. If I start to add a line like this, just to put something up there, and we take that line and we combine it with probably that Ryan would have a flat line here that would look a little better than what I'm about to draw, but bottom line right about there, right? And so you're kind of in this ascending triangle, and what happens? Do you break out sooner or later? It depends on how far in the triangle you are. The general rule of thumb that I've used is if you're 3/4 of the way, then you should start looking for breakout. Where these would intersect is probably out here a little bit further. So you're kind of getting towards 3/4 of the way into this triangle from when this low was formed versus all the time that has, or even you could go back here, whatever, to a certain maybe former support level. But the point is that you're getting towards that where you should start to see something develop, break out or break down one way or the other. Not maybe tomorrow, but certainly in the not too distant future would be the expectation. So again, I've been saying this on some of our promotional webinars. I think it's going to be really interesting. I think there's going to be a lot of opportunity in this market in the coming months and really the whole year. As I see things now, I think it's a very interesting trading juncture we're coming up to. And again, the bottom line probably is more money's flowing into the risk on sectors in my book. Hey, things are going to start picking up again book. And that's just being objective about it. And the question is, are these money managers acting prematurely? Are they getting too far ahead of themselves, too far ahead of the realities of this economy, the realities of the Fed, to really be doing this now? And will it end painfully for them? Or, right, are they right? Or are they really the ones with the right take, that because they've got data or research or things to support what they're doing? Tough to say, right? Tough to say. But that's where things end up this week. We covered quite a bit of ground. I hope some of what I share with you helps you out this week or in the future at some point. And I'll see everybody through our webinars, our updates, and maybe even every now and then I sneak in a short video. So a video update. And maybe I'll do that at some point. So we'll see. But anyway, everyone take care. Stay one step ahead of them in these markets this week. Thank you.